Good morning and Jai Hind. In this video, I am going to start the second chapter in your book, that is Basic Accounting Terms. So, we are going to study the accounting terms which are daily used in the business world. So, let's start. First is our business transaction. The business transaction is an economic activity of the business that changes its financial position. Whenever any business transactions takes place, it results in a change in the value of some of the assets, liability or capital. Next is event. It is the consequences or result of a transaction. Next is account. In actual practice, the individual transactions of like nature are recorded, added, and subtracted at one place. Such place is customarily termed as an account. An account is a record of all the business transactions relating to a particular person or item. Next is capital. It refers to the amount invested by the proprietor in a business enterprise. Amount may be in a form of cash, goods, or assets. So let's move towards the next slide. Drawings. Any cash or value of goods withdrawn by the owner for personal use or any private payment made out of business funds are called drawings. Next is liability. It refers to the amount which the firm owes to the outsiders, excepting the amount owed to proprietor. Or we may say that liability are debts. They are amount owed to creditors. See, there are four type of liabilities given here: internal liability, external liability, non-current liability, and current liability. Internal liabilities: all amount which a business entity has to pay to the proprietor or the owner are internal liabilities, such as capital and accumulated profits. Next is external liability. All amount which the business entity has to pay to the outsiders are known as external liabilities, such as creditors, bank overdraft, loan, etc. Next is non-current liability. These refers to those liabilities which fall due to payment in a particular long period, normally after more than 1 year. Example, long-term loans and debentures. And current liability? Current liability refers to those liabilities which are to be paid in a near future, normally within 1 year, like bank overdraft, bills payable, creditors, outstanding expenses, and short-term loans. Next is assets. Anything which is in the possession or is the property of a business enterprise, including the amount due to it from others, is called an asset. Or anything which will enable a business enterprise to get cash or benefit in future is an asset, like cash and bank balances, stock, furniture, machinery, land and building, bills receivable, etc. All these are assets. There are various types of assets also: non-current assets, current assets, and fictitious assets. So, in non-current assets refers to those assets which are held for continued use in the business for the purpose of producing goods or services and are not meant for sale, just like land and building, plant and machinery. These are also called as fixed assets. These are classified into two categories: tangible and intangible assets. Tangible assets are those assets which can be seen and touched, like land and building, plant and machinery, furniture, stock, cash. All these are tangible assets. Intangible assets. Intangible assets those are those assets which do not have a physical existence, like goodwill, patent, copyright. trademark, computer software, all these are intangible assets. Next is current asset. Current assets are those assets which are meant for sale or which the management would want to convert into cash within 1 year. Within 1 year, okay? These are also known as short lived or active assets, just like debtors, bills receivable, all these are current assets. Next is fictitious or nominal assets. These are the assets which cannot be realized in cash or no further benefit can be derived from these assets. Just like advertisement expenses, the expenditure we have done on advertising, that is, these are nominal assets, fictitious assets. Next is capital receipt and revenue receipt. It is also necessary to make a proper distinction between capital receipt and revenue receipt, because revenue receipts are shown on the credit side of the trading and profit and loss account, whereas the capital receipts are shown in the balance sheet, either in an increase or decrease. Increases the liability or decreases the assets. So, what are the types of capital receipt? Capital receipt may be like amount received from the sale of fixed assets or investment, or the amount contributed by the proprietor partners, or the amount received by the way of loan. While the revenue receipt, it may be like money obtained from sale of goods, commission and fees received, or either the interest or dividend received on investment. Okay. Next is the expenditure. Any disbursement of cash or transfer of property or incurring a liability for the purpose of acquiring assets, goods, or services is called an expenditure. It may be either capital, revenue, or deferred revenue expenditure. Okay. Next is expenses. Expenses is a cost incurred in producing and selling the goods and services, like cost of goods sold, yeah, amount paid for rent, commission, salary, advertisement, or decline in the value of asset. All these are the expenses. Next is income. Income is different from revenue. The amount received from sale of goods is called revenue and the cost of goods sold is called expenses. The surplus of revenue over expenses is called income. Next is profit. It is the excess of total revenues over total expenses of the business enterprise for an accounting period is called profit. Profit increases the investment of the owners. Okay. Next is gain. It is the monetary benefit, profit, or advantage resulting from events or transactions which are incidental to business, such as sale of fixed assets, winning a court case, or appreciation in the value of an asset. So, next is loss. It conveys two meanings. First is it conveys the result of the business for a period when total expenses exceeds the total revenue. Okay, and the second meaning that it refers to some fact or activity against which the firm receives no benefit. Okay, that is known as loss. Just like theft of an asset, this is a loss. Okay, so with this, I am going to end my this session and we will continue to learn the other accounting terms in the next video. Thank you.